following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and it's my pleasure to be here Monday through Friday at 11 o'clock till noon Eastern Time, 877-927-6648. Great date to call. Mixed market. You've got some sectors that are still weak. You've got some sectors that are moving up. And the Dow is at this point up 80 at 17,961. S&P's up 618 at 2,086. Comp index is up 24 at 49.41. Gold is down $6 at 12.12. Silver's down 27 cents at 16.84. This is going to be interesting. You got platinum down 4 at 11.73, but you got copper up 2 at 2.77, up 5.90. Just within that trading band, but lucky that it moved up today. It was looking quite poor yesterday. Crude oil is up at 53.37, up $1.26. You've got bonds. Now, this is going to be very interesting. You've got bonds. The TLT's down 5.30 seconds. Down 5 ticks at 129.95. And the bonds themselves are... let me just see what the continuous contract is doing here. Yeah, that's what I thought. Very interesting. All right. So you would have thought that with the down, with the down the S&P moving up like this, that bonds would have been a little bit weaker, and they're not. This is telling us something. Anyway, the dollar at this particular point, look at this. You got the dollar. I'm just a tad behind, but in the meantime, back at the ranch, the dollar is up 78 cents at 97.56. So the correlation that we're looking at between the oils, so crude oil in this particular instance we're looking at, which is in leg B in the daily, doing very nicely here. On a very short-term basis. Let me just squeeze this closer. You can see nice V-shaped turnaround. That means the USO is acting quite well. Yep, the USO is up 40 cents in very strong leg B. Still within the confines of the H pattern in the weekly charts. I have to tell you, this is such a fascinating, always a fascinating market. I have to now put an up arrow to say that crude oil could probably go to a C and a D. All right, in the daily chart at least. There it is. That's what I wanted to look at. So we had some very interesting commentary and analysis all the way through from 8 o'clock when John Logan came on, and then Tom O'Brien at 10 o'clock update every day, and updated right at 10 o'clock. Very detailed and important update that Tom gives. Then you got Steve Rhodes continuing. Right through with these 2 hours, really interesting analyses in different sectors. Then I try to do the very best I can. Yet this Tuesday time frame, and Tuesday is the day that we have an options hour. An options hour comes on at about at 12 o'clock. As soon as I'm finished. And then you've got a program through the rest of the day. You got Daryl, you got Dave, you got Tom back again. Then you've got Andy Hecht. So we just got full programming here. Let's just get on with this, because this is, I would put this into the category of importance today, because let me just show you why. Because GE had a very strong session yesterday, and to me the follow through or non follow through today is going to be very important, just as some kind of a short-term market indicator, Dow indicator. But look at this. IBM is holding very nicely, holding that breakout level, came back to it, tested it, now it's moving up again. Not a fantastic pattern in the weekly chart, but certainly the daily chart saying there's a chance that it could try for the 165.36 level to make a leg, another leg up. And most importantly, when you go to Triple M, the candle yesterday was good. how the candle closes today is going to be important, because Triple M has been a leader in the Dow for a long time. It's only barely had a pullback from 170 to the 161-ish area. No big deal after such a big move. But if it makes a new high in the next 2 weeks, if it goes above 170.50, I would have to say that is a very good market sign. And UTX, which is my G's, my short-term indicator, UTX is saying, hey, you know, I've had a big move. I'm really struggling. Yeah, I'm moving up, but I need to really break this multi-hit downtrend line. How a downtrend line can show such importance is amazing. How does it know to make exact lower lows with a trend line when there is no trend line there? It's only after the fact that we can put it in. So we put it in, and from that high that was made at 124.45, the last high it was made on the 20th of Feb, you retested it by just missing at 124.33. So that means I read it incorrectly. 124.45. 124.33, correct. That's what I remember. And that slightly lower low gave a 2-bar reversal in the weekly chart, Chapman Wave 2-bar reversal. It gave a little double top in the daily. And since then, we've gone in a trend line to the downside. Let me do this just to show you how important I think this is. Wait, put that in. Make it a different color. Let's make it green, because if it breaks out above, it's going to be a positive. So look at that. Look how it's been repelled every time. And now for the first time, you've got the MACD just about to turn up. I have to respect that UTX will be a key indicator if the positive divergences between the price and the technicals, if that takes place by seeing a push from 118.33 up 47 cents right now to by Friday afternoon to a close somewhere in the 119.50 to 120.05 area, I'm going to have to say, hey, that's a breakout that could be one of those. It's the fourth stock in my Dow quartet. Let me just put it this way. When I'm looking at all my different indicators, my plethora of indicators, it is imperative for me to put each one in its own category and define what it does, and then to say, how is this working in the bigger scheme of things ever since the March the 6th low in the Dow of 2009? Well, what we have seen is that there's been a rotational correction, and that rotational correction started the first summer after the big breakout from 2009. That summer of 2010 taught me that I've got to now take into, as a factor in the market, I've got to take into, I've got to respect the fact that there could be a rotational correction that takes time, a little bit of price, as certain categories that have done very well take a breather, and the ones that have been lagging come on quite strongly. That's what I want you to define right now. I want you to say that if this is another one of those, what we call a high-level consolidation, then a number of things are going to take place. Number one, you've got to concentrate on something like the XLF. Why? That's been a lagging indicator. It's been a lagging sector. And while there are one or two stocks that have done very well, the XLF, S&P Select Financial Spider Fund, has shown no leadership. It's shown solidship. It hasn't shown weakness, but it hasn't shown strength. So very often what we've seen is when there's been a market pullback, the financials have a little bit of a boost, but not all that much. And what that does is allows some fund managers to take that as a ameliorating effect for the down move, and they can kind of hide money there for a little while because it's been so solid in that it hasn't broken down yet. So far, it's held very, very well. So that puts me into a category of saying that from my perspective, now let me give the big picture as I see it. All right. In the big picture, the monthly chart working backwards in the Dow, I'll do each one, we'll do that today because this is a pretty good day to do it while we're kind of waiting to see if there's a breakout or not. In the big picture, that 9-period exponential moving average has just been a phenomenon. It's been saying that as long as the Dow is holding above there, the 9-period exponential moving average, which has support of 17,533, and the most recent pullback has been 17,585, 50 points above. As long as that 9-period moving average holds, and there are these tight bars, it says there's a chance that we could make a new high above 18,288 if, and now we go to the if, the weekly chart holds this uptrend. It's called the uptrack, Chapman wave uptrack buy zone. And if it breaks down and by Friday or early next week, it takes out 17,700 support, that would suggest that this market is starting to struggle. And as it's struggling, what we have to look at is how that 9-period moving average in the weekly chart at 17,861, we're at 17,955 right now. How does that remain as a propellant, or how does it become, as it did just for 1 week back in the week of the 27th of March, a repellent? And that's going to be very important. My analysis right now is saying that the weak technicals, the fact that we've been twice in the last 4 or 5 weeks underneath the 9-period moving average on a close on a Friday, suggests to me that this rally is going to peter out. It's going to start to die on the vine quite soon. And if it does that, you've got to be real careful because 17,860 support could go quite quickly. I am wrong. And I'm always quite prepared to look at the other side. I love to do that because it tells me what I'm up against. It tells me what to look for. It tells me what are the criteria on the other side of the coin that I need to study. So that says that a Dow close above 18,000, I've been saying this for a while, above the 18,808 level would signify to me that there's enough residual strength to start pushing the Dow towards the high of 18,205 that was made on the 23rd of March. I don't see that yet, but we'll see. The day's young. And I'm using the Dow just now as a benchmark, but of course, we've got to be looking at the S&P, the IWM, the New York Stock Exchange, etc. I'll be back. Basil Chapman, Tight Emissions Hour, Dow's up 7.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
A little bit, yes. It's up 63. S&P's only up 4.5. My bias is still more towards, we do have longs, but my bias is really more towards the negative side. We'll see what happens here. We're going to go to John in Philly. John, how are you?
Basil, I'm very well. Thanks for taking the call, and hope you and your family had a nice weekend last weekend.
Yes, we certainly did. Hope same with you.
Thank you, yes. Basil, I wanted to segue to a conversation we had last week. Thursday, the 2nd, you were very helpful to me in answering the question on NASDAQ Composite, COMP. Was a tradable top forming? I call specifically today with this question. Today, COMP, the NASDAQ Composite, traded higher. It's still up on the day. Traded higher to 4948.88, 0.4 point higher than the high on Monday, the 30th. Question.
Correct.
Is that the top? Is that the lower high? Are we done with this bounce?
So that would be leg B, what I call a gray B. In other words, it is way under the previous high of 5,042.14 made on the 20th, which was a peak D. That was the preferred count, peak D. This is what I'm looking at, John. If you look at my charts here, you'll see that the weekly chart is showing that the MACD, the moving average convergence, has dipped, but very slightly underneath the green line is under the red line in the MACD. you'll also see that the stochastic is now under 80%. It's at 76%. That does not discount bounces. But what I'm really looking at here is that how can I put it? The manner, the characteristic of this particular bounce means I have to look at the candle fully. In other words, I have to look at the candle of the weekly chart, and I can't extrapolate from data here on the second trading day of the week, only 2 hours into the second day, and say something emphatically about the weekly chart, because it's a work in progress, and we will only know on Monday of next week how the candle on Friday closed and how it is opening on the following week, and that'll give us a sense of, as I say, the characteristic of the candle. But the internals of the candle are saying it's getting harder and harder for leadership to be maintained, and it's almost as if it's being dragged up by another index. And when I look at it in that context, I'm saying to myself, this particular daily chart, it's a very unusual thing to see. It goes sideways like this at a top in this kind of a narrow range. But then I look back and I say, wait a minute, it did that before when in late December, going into the breakout of February, it had that same arch formation, except the difference was that the lows were higher lows than the original one, and that's the low that we're talking about on the 16th of December. And yet the highs were not that much higher than the 48.10 high that was made. And basically you can consider that it was a sideways consolidation and then a breakout. And the way I'm looking at this breakout at this particular point is that I'm thinking it's more like a coda. It's like an extension to a move that's already been made. And that there's just enough, think of it like almost like a rogue wave, that there's just enough energy to fool both the bears and the bulls, because the bulls, you can tell from the action that it was so quick and so consistently up when the composite index broke above the high of the 6th of February, which is at 47.87, pulled back for a day, and then the very next day broke out. And from that day on, it just had higher highs every single day. That's so unusual to the move that was that final move to a peak at 5,008.87 on the 2nd of March. Then it pulled back, and still there were residual flurries to the upside. And it went to that. Now, that was a perfect example of a rogue wave. It gives me a chance to talk about it. On the 2nd of March, the composite index went to 5,008.87. It pulls back, makes a cup formation, and the MACD and stochastic were fading miserably when it shot up to a new recovery high of 4,042.14 on the 20th of March. And at that point, we're going to hold off, and the commercial will break us, and we'll be back to continue this conversation straight after this break, if you're still there, John.
Thank you.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're back, folks, and we're looking at the Comp Index, which is up 24. It is the much broader NASDAQ Composite Index, unlike Index 100 or the QQQ series. So this has 2,000 or something like that stocks, and it's trading at 49.41. Previous high, all-time high was not all-time, but the most recent high was 5,042. What I want, John, what I wanted to show is the mix of the time frames. If you're looking at the 120-minute chart, you'll see that there was a very steady rise from the 9th of February all the way making an arch formation, coming back towards the 200-period exponential moving average, having another rally. That other one had three buy modes, actually, but basically we can think of it as two buy modes. They went to a peak F. That was that spike to the upside, comes back down, and it doesn't touch the 200-period exponential moving average, and it starts from a trough G, another A, B, C, D, E, and that's where it turns around at the 5,042 level, comes down in a much quicker time frame. If you look at it as the 200-period exponential moving average, right there, this pinky gold line, that line is saying it should have been a magnet for a spiral back without the retests and break to the downside. And because, how can I visually put this? If you're thinking of a trampoline that has a couple of holes in it, if you don't hit any of the holes, you can bounce very strongly. If your foot just kind of gets a little bit stuck in the hole, it's going to drag you down and not allow you to go up as much as you should, because there's a gravitational effect and as well as a frictional aspect. And that's what I'm looking at here. So that the stochastic is back at 85%, and yet it's barely, it just made a leg D to the upside to complete that previous move in the second arch formation. Let me make this here. So that's why I say that in terms of my work, this is probably a very important couple of days. Yes, yesterday morning after the S&P, the futures, the Dow, the NASDAQ, all the futures got smacked and were at lows of the day almost on Friday when the market closed. That continued into Sunday night. There was a bit of a rally, and then there was a sudden sharp decline early on Monday morning. And yet, there was a moment when the Dow was up 160, 180 points, S&P up 17, 18, 19 points after all of that. And that's saying that the fight is on. And that's why I've been talking about this rotational correction, and that I cannot rule out that there is a chance that we have been under a correction at this particular time, under the umbrella of a correction. That's why we haven't broken out to new highs. But we're also not breaking to new lows because it is rotational. It is rolling between the different sectors. And you can see that by, if you look at the different sectors, you can see the transportation index is really got taken down much more than almost any of the other indices. So what I'm looking at here is there's a chance that this is just part of it. And the reason why I say this is so important, if by Wednesday afternoon, let's just give it another day. If by Thursday at 2 o'clock, the composite index is trading closer to 49.67, 49.77, closer to that level, I would have to concede that maybe there's a rotation going on that's not going to drag the market down as much as I thought in this phase, but sectors will be vulnerable. But there are just enough stocks to keep this market moving towards the highs. And all I'm going to say is if by Thursday at 2 o'clock, it is instead of at 49.42 where it's at right now, it is closer to 49.10 or lower, then the move is the composite, that the move is done for now, and that the composite will retest the 200-period moving average of 48.73, and that's where we get the fourth time down in just since the 25th of March. If that doesn't decisively take out that support, I'd be surprised if it doesn't. If we've already gone down to the 49.10 level, 49.10-ish by Thursday or Friday, I'd be surprised if that sell-off doesn't continue. So those are the parameters that I'd look for. But most of what I'm looking at suggests that this is going to fail. The composite index rally is going to fail within a day or two, and that we should be trading lower. That's what I'm looking at, and I'm saying I'm wrong if we're up in the high 49.60s to low 49.70s. There could still be more residual strength. I'm just trying to make it as clear as I could. I should, in fact, I don't know if you ever look at it. It's the VXN. I believe, yeah, that's the VXN is the NDX 100 volatility index, and it's holding pretty well. It should be much lower, and it's at 1606. So that's another clue to me to say a change has begun in the VIXN, but not enough yet to be emphatic about it. But I can just tell you this: if the $VXN.X is the way I get it, but it is the NASDAQ 100 volatility index, if that starts to trade above the high of the 26, if it goes above 19.07, the NASDAQ is coming down, and you're going to start to see many of the sectors that have been acting well, up until now, start to be impacted. That's my impression.
Basil, thanks so much for that thorough review of all those factors. In closing, I'll just sign off the air by sharing with you. I am trading lightly. I wish I was longer than I am, but everything energy stock related. Everybody tends to focus on the XLE ETF, but I will also just share 3 other ETF tickers with you, for you and your listeners, that give you, when you look at all 4, you get a real good snapshot of what's happening in energy stock land. Those are XLE, of course, XOP, FCG, and lastly, XES. And when you look at all 4 of those, you see the money is just flooding back into energy stocks right here.
So that's very interesting. So it's the XLE. I've got the XOP up right now. That's in leg D. And you see, John, when I look at this, I don't care how much money is flowing in. It's the patterns that have to change. I've still got arch formations. The lowercase h goes to a lowercase m. And that, so far, nothing's changed about that. What has improved a lot is the weekly XOP, which is the SPIDER S&P oil and gas exploration. That is starting to improve, but the stochastic's still only at 62%, and the MACD has a lot of work to do to be able to go from the 53.43 level in the price to push the price to 59, where the 200-period moving averages. So I am watching this really closely, because the dollar, which is what was the big fuss before, is actually strong today. So there's, as long as you can have a sector, even though it's made up of subsectors, like the energy sector is, as long as you can have a sector moving in a sense independently of what was impacting it negatively or positively before, then you've got something that says there is new energy. It's not residual. It's not a relief rally per se. It is actual new buying. And that's what I want to be able to see, because if the dollar is as strong as it is today and the XLE and the XOP are moving higher, it's saying we have our own momentum to the upside. That has to change the chart of those arch formations. So, yes.
Thanks for all the commentary, Basil. I'll sign off. Appreciate your time.
Thank you very much for calling. Always appreciate your salient points. Thank you very much, John. So, folks, let's just do this. We're looking at the dollar, and if you put it together with the EUR-USD, which is the currency pair, you'll see that that's made a peak C1, maybe a C2. But that pattern, see that arch formation in the weekly chart? Now let's go back to the XLE. You see the arch pattern that was made? It's a little bit further along. The last one was a serious low, was the week of December the 19th in the XLE, the S&P Select Energy Spider Fund, and it went for 2 bars, strong bar reversal, 2 bars up. Now this particular bar that we're looking at, this particular kind of engulfing candle, should have set off a move in the XLE that had time and price to the upside. In fact, given the time of about, 2-3 months, we should really be at 85.50 to 86.80 in the XLE, based on this particular candle. That seems to confirm, for me at least, that I'm looking at a pattern that says lowercase h goes to a lowercase m, and that can repeat. It's called a repeated M pattern. And we're going to see, does the XLE break above 82.43? If it does, suddenly the monthly becomes a little bit better. Not that much, but a little bit better. The technicals are still very poor. Looking at the XOP being the S&P Spider Oil and Gas Exploration, it's a little bit stronger, but it has pretty much the same pattern in the weekly. But that one says I'm real close to taking out the left side high of 54.21. Today's high was 53.48. I'm getting close. And that's represented by a stronger move in the daily chart than you saw in the XLE. And it's leg D right now. So it's going to be very important how peak D interacts with the general market. What was the other? XES. Good, thank you. I was just about to ask you XES. I never look at the XES as the first time. So this is AB. There's only leg C in the XES, which is the Spider S&P Oil and Gas Equipment. Okay, so this is the equipment. Strong move in the daily, but look at the weekly. The weekly is still pathetic. So the weekly has to go from the 27.38 level it's at now. It really has to get to 30. I would even say 30.70 to 31.50 before I would consider that it's a powerful move. Now that's got absolutely nothing to do with it as a trade. If one was in, as we've had a couple of callers saying we've got in near the lows, that's fantastic. I'm a little upset that I didn't do it. I was watching it. I just didn't actually pull the trigger because we had other positions on. But yes, this is looking very good on a short-term basis. Let me just do this. XES. You always have to pull the chart back to see where the lowest low bar is, because if you start your count and it turns out that you missed the actual low bar, you could be in deep trouble. So that's that right arm extension pulls back. Now we've got an A, a B, a C, a D, an A, a B. Oh yeah, a C and a D. Okay, very good. That was that instant restart I was using right there. Okay, so we've got two of the latest buy modes in the monthly chart going to a peak D, and let's pull back very sharply. Yep, I just think that I got to treat this right now as a counter trend bounce. It could turn into the real thing, but at this point I have to consider it a counter trend bounce, and that's the XES. Let me write that down because I hadn't ever looked at that before. Can't remember right now off the top of my head what I usually use. And FCG. Oh, another one I haven't looked at before. FCG. Leg A, B, C. Leg C is the same. It's also equipment. Oh, this is the first trust reserve natural gas fund. Oh, isn't that interesting? You and Jen, I thought I heard Steve say this is the period that in the work, all the work he's done, this is the phase right now where natural gas should start to move higher, just in his cycle work. So I'm looking at this and I'm saying, okay, natural gas, if you're going to move, you're at UNG is what I'm looking at. It's at 13.44. And let me just write this down before I forget, FCG. Yeah, you better move very quickly if you're going to show strength. The high to take out is 1366 is the first high. The real high that you need to take out is the high of the 24th. That candle, little doji candle, 1423 is really, if you can't power to the low 14s by this coming Friday or early next week, by Tuesday of next week, that's going to suggest that natural gas is under tremendous selling pressure and there is just an abundance of natural gas. So now I want to just turn around because I thought I saw an email question. Yeah, the VIX. All right. Let me go back to the VIX. The VIX index, trading at 1434. Considering the internal strength of, oh, there's a break again. Oh, that was quick. Considering the internal strength of the weekly chart, I'll talk about this in a moment. I'll come right back. We'll be talking about the volatility index. Right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, we're back. So what we're looking at here, well, I said the volatility index. I'm also looking at the VXO, but let's go back to the VIX index. I actually like the VXO, but I need to do a little bit more work on it to discuss it. So what I've done here in the VIX index is I've shown you that there's a cup formation, a second cup formation forming in the weekly. It'll fail if it's at 1434. If on Friday it closes below 14, let's call it 1385. That'll be a failure. And the monthly chart has a lovely rounding bottom, as they call it. Second time, see, this is the first one that goes from the October 2008 bank crisis low. They've got that one that went right around there. Now you've got another one, but it's flattening out. And flattening out, you can flatten out and stay flat for a long time. Look at this. This is the VIX index back in 2004 to 2006 and 7. You remember when I was on air, I kept saying this low volatility index can remain low for a long time, And that's why I had to delay when I got my sell signal in the Dow. I had to delay it all the way until the last day of December of 2007, on the monthly, that is. So these things can last a very long time. Being low is saying it's buying intensity, and that's the thing I have to respect here, that even though it's holding quite well in the daily chart and even the weekly chart, it is under the 15s, and that 15 area is kind of a swing point. So under the 15 is suggesting that there is buying pressure, trying to keep it as simple as possible. And as long as there's buying pressure, that's saying staying at the 1431 area, which it is now, or going lower today, would suggest that we're going to have more upside action towards the end of the day. If at any point you start to see the VIX index start to climb and get to the 1450s again today, that's going to say, buying pressure is done. Now you've got to be careful for the late day selling pressure. So don't forget, you've got Chad Coker coming up next to the Options Hour, brought to you by Thinkorswim. Fabulous program, great questions answered, and great insight given. So please consider it. Now, let me just do this. We're about to wrap up. I'm going to make it real simple. VIX index, trading at 1430, starts to go towards the 1410 or under 14, you'll see buying pressure into the close today. If for whatever reason there's a sudden bout of weakness in a 3 o'clock to 3:10, 3:15 time frame, just 45 minutes before the bell, closing bell, and you start to see the VIX climb and it gets towards the 1450s, you can expect that there will be some selling pressure into the close. If we start to see selling pressure into the close, as we saw yesterday, and it goes on, we've seen it for quite a few sessions over the past week and a half, that's suggesting that fund managers are doing this rotational thing. They are getting out of stocks, as the big stocks, major stocks, as they are rallying. So I'm just trying to keep it as simple as possible. So here's the other thing, Apple, as we're about to sign off. See, Apple, it's just struggling here. It's holding beautifully. I mean, when you look at the long-term chart, but on a short-term basis, it should be above that high. It was made on the 19th of March of 129.25. It should be at about 133 right now, based on what's been going on in the general market. And if you're looking at, let's just run them, the big ones. Amazon, this is just stuck. It's not doing anything. Google, G-O-G, Goog, stuck, not doing very well. I think there's a rotation going on. That's the reason why, to go back to John from Philly's question about the comp index, of course, this pertains a little bit more to the NDX 100, but of course, they're also in the comp index. I'm suggesting that there's a rotation going on, that some really big winners are starting to falter. You've got, let's see where Amgen is. Amgen is probably up today. Yep, it's up at 3 at 89. But look, it's way off its high that was made just recently. Yeah, I'm looking at this and I'm suggesting there's a rotation that's continuing. I'm looking more towards the weak stocks and the strong stocks. We'll see what happens. Have a wonderful day and speak to you again on Wednesday. Stay tuned. Got the Options Hour coming right up.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.